Bitcoin being the only free market in the world where anyone can participate and express their opinion about the future is telling us, by the way it's trading, yields are rising in the US and Bitcoin is sort of struggling a bit. I mean, it reached 108,000. We haven't really retaken that level. We're flirting with the $100,000 level. It looks a bit toppish to me. I think if rates continue rising, Bitcoin is going to tell us that there's some sort of financial disturbance coming.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Arthur Hayes delves into the chaos of global economic turmoil, the rise of crypto sovereignty, and what lies ahead for the future of capital. Let's catch him up to know more.
The first chart I showed in my presentation was a chart that Mario Draghi put up in the European Competitiveness Report from last, I think, September. And it showed the price of electricity per kilowatt hour in Europe, the EU, versus China and the US. And the EU pays something like 2 to 3 times more money per kilowatt hour for electricity, for energy, than China and the US. And so when energy costs you 2 to 3 times more than your competitors, of course your products are 2 to 3 times more expensive, and your industry is less competitive. And that's why we're seeing, the European economic malaise, especially in Germany, where large manufacturers who produce iconic global brands cannot compete with China because China has cheap electricity, a great workforce, and produces the highest quality, lowest price goods in the world. And it's because they focused on generating energy in the cheapest way possible. The United States is blessed with lots of natural resources. And because of that, energy costs within the United States are quite affordable as well for their industry. And as such, Europe's caught in the middle where they basically cannot compete with the US or China. And then the next thing I pointed out was essentially the mind virus that is within the European political elite, which is they are allies of America, and America actively sabotages them by essentially cutting off their sources of cheap energy, aka Russia, and then forcing them to buy expensive US energy, aka LNG. And you're seeing this play out. There's rumors that the Biden administration greenlit the destruction of the Nord Stream pipeline that helps supply cheap Russian gas to Germany. And so essentially, and Trump has been very vocal that he wants Europe to buy even more US energy. And so caught between this rock and a hard place, Europe has chosen, okay, we're going to be allies with America and buy their expensive energy, but we still want to have a very expensive welfare state. Europeans want the benefits of being European. I get it. And you can't really mesh the two. So what they do, they have to borrow money. And so I went through some ways in which I believe that capital will be restricted from investing in America. European capital will be made and mandated to invest in European companies, in European government bonds.
And what do you see as a solution here? There's a number of challenges and problems that you've pointed out to you, but what are the solutions that you would offer? What are some realistic ways EU can get out of this situation?
I approach it from the point of view of the ordinary citizen, right? And the democratic process has been subverted. Their will is not being represented. Most people just want a nice life, cheap energy, have a good life, good job, raise a family, all that kind of stuff, right? They're not really involved in all this political mumbo jumbo. But the politicians have hijacked their opinion and their vote and sort of gone on this other direction. I don't think they're going to be able to change that, the ordinary individual. However, if you are saving capital, there is a way that you can see this coming in front of you. The elites are telling you exactly how they're going to restrict your ability to earn the most amount on your savings. And you can buy things like Bitcoin. You can participate in the cryptocurrency ecosystem, decentralized finance, and all these sorts of things. You can participate in a global financial economy that sits apart from the nationalistic economy that you're going to be forced into if you hold fiat currency in a bank or insurance company or pension fund. And so that's the message that I'm trying to get out there is, okay, the political elites are going to do what they're going to do. They're telling you exactly what's going to happen. Right now, you have the opportunity to take your capital and move it somewhere else. And before that opportunity is blocked, you need to move your capital into something where you control your own destiny. and not somebody in Brussels or your particular nationalistic government capital.
Understood. So I guess the final message you had yesterday, get out. You were talking about the capital, remove the capital, bring it on chain, for instance, right? Or could that be interpreted as actually physically get out of EU?
I'm not saying. I mean, people have lives; they like where they live. Maybe you just live in Switzerland or a nice mountain country. Do you want to leave? Probably not. But at least you can protect your assets from inflation, protect your assets from the debasement of your national currency by holding crypto. And then obviously when you need to use fiat to pay your bills, use fiat to pay your bills, but at least you're protecting your savings.
Bitcoin's price has recently stabilized above the $100,000 mark, but cryptocurrency trading expert warns that this milestone might be fleeting. Ali Martinez, a seasoned analyst, points to historical trends suggesting Bitcoin could enter a bear market within months. His analysis highlights the predictable nature of Bitcoin's market cycles, particularly following its halving events. For instance, after the 2012 halving, the market peaked 367 days later. Similar patterns followed the 2016 and 2020 halvings, with peaks occurring 526 and 547 days afterward, respectively. Currently, Bitcoin is 276 days past its 2024 halving, implying a potential market top between May and October 2025. The anticipation of Bitcoin's rise is bolstered by regulatory shifts under President Donald Trump's administration. Policies promoting Bitcoin's legitimacy and banning central bank digital currencies, CBDCs, have spurred optimism. These changes, alongside institutional support from financial giants like Morgan Stanley, create a favorable environment for Bitcoin's growth. Analysts remain optimistic, with some projecting a price of $170,000 by March 2025. However, maintaining key support levels such as $97,877 will be critical for sustaining upward momentum. Any significant dip below $100,000 could jeopardize bullish sentiment and potentially trigger selling pressure.
So I want to talk about the markets. You predicted that the crypto market will peak mid-March of this year, followed by a severe correction. Can you share insights into the indicators or factors that are driving this forecast?
So first off, I usually get most of these wrong. That's sort of how I'm approaching this. However, while I don't know when the peak will be, I've actually turned a little bit more bearish recently, and that's mainly because of how I see the 10-year U.S. Treasury trading. For whatever reason, a yield above 5% seems to cause financial dysfunction starting in the United States and in the global markets for whatever reason. And we've seen as the Fed has started cutting rates in September of last year that the 10-year yield bottomed at about 3.6%. Now it's at, I think, like 4.7%. All the while the Fed is cutting rates. But inflation globally is quite sticky, especially in the United States. And I think that we're on the cusp of a mini bond riot where you're going to get yields above 5%. Somebody's going to blow up in the U.S. financial system. I don't know who. I don't know when. But we know what the response is. The response is printed money. And so I think Bitcoin being the only free market in the world where anyone can participate and express their opinion about the future is telling us, by the way it's trading, yields are rising in the U.S. and Bitcoin is sort of struggling a bit. I mean, it reached 108,000. We haven't really retaken that level. We're flirting with the $100,000 level. It looks a bit toppish to me. I think if rates continue rising, Bitcoin is going to tell us that there's some sort of financial disturbance coming. Obviously, if you are like me and you don't use a lot of leverage, it doesn't really matter because you know what the response is. The response is printed money. The response is, let's flood the world with dollars or euros or yen or whatever it is. And Bitcoin will trade much higher into the future, but we could experience some, short-term pain. That's what I sort of see coming in, with my fund Maelstrom. We've raised a bit more US dollars and putting them in Athena, earning, very good yields on chain. But we're a bit light on our crypto risk. We're still not long, but we are lightening up our portfolio a bit.
Bitcoin is on the brink of breaching the critical $106,000 resistance level, sparking hopes for a rally that could set a new all-time high. Despite recent market fluctuations, the cryptocurrency's bullish momentum remains intact, echoing patterns seen during previous market cycles. The Mayer multiple indicator, currently neutral, suggests Bitcoin is neither overbought nor oversold, leaving room for upward movement without an imminent correction. This balance between buyers and sellers highlights a stable market foundation, fueling optimism among enthusiasts. Bitcoin's dominance in the cryptocurrency market has surged past 57%, following a 4-year cyclical pattern that often coincides with price rallies. This trend mirrors the 2020 cycle, where dominance climbed from 60% to 69%, heralding a significant bull run. If Bitcoin can turn $106,193 into support, it may target $113,428, further reinforcing its bullish trajectory. However, failure to breach this resistance risks a consolidation phase or potential dips below $100,000, testing the cryptocurrency's resilience. Nasdaq has made a significant move on behalf of asset manager BlackRock, filing for a rule change that could enhance the flexibility of its spot Bitcoin exchange-traded fund, ETF. The proposed amendment seeks to allow in-kind creation and redemption, a process where fund shares can be exchanged directly for Bitcoin rather than cash. This development marks a potential shift in the operational framework of the BlackRock iShares Bitcoin Trust, which launched in January 2024 alongside 10 other U.S. spot Bitcoin ETF. According to Bloomberg ETF analyst James Seyffart, BlackRock should have had this flexibility from the beginning, underscoring the importance of in-kind transactions for efficient fund operations. On the same day as the filing, 6 additional crypto ETF applications were submitted in the U.S., reflecting the growing momentum in the cryptocurrency market. The proposal highlights that authorized participants, institutional entities responsible for creating and redeeming fund shares, could now choose between Bitcoin and cash for these transactions. This change aims to streamline fund operations and better align with the evolving needs of the cryptocurrency ecosystem. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to BitcoinZella for daily news all for free. That's all for today's video. Until next time, and do not forget to subscribe to BitcoinZella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.